Hey, good morning, everybody. Welcome to the Wednesday webcast. I'm Todd Gordon, founder of TradingAnalysis.com. Typical 2.5 minutes late. Sorry about that, guys. At some point, I think in year 2 of this show, we will kick it off on time. We have a good show here for you this morning. The team is standing by. I think you can hear them in the background. Good morning, Trading Analysis team. How you guys doing?
Good morning,
everybody.
What's happening? So guys, all good.
Alex had birthday this week, so we have to wish
happy
him
birthday, Alex. Happy birthday.
Thank
buddy.
you, guys. Thank you, guys. I'm in the late 40s, so not celebrating much.
Gotta keep celebrating.
After 40. Benny, you're the young pup on this channel. After 40 doesn't matter anymore, does it? So anyways, guys, we got a big show. We got a really special guest who's standing by, so just going to catch up on that 2.5 minutes late standard operating procedure here at the Todd Gordon Studios. Let's call it that. Soon to be Bennett Tyndall Studios. You're taking over operations, aren't you soon, sir? So guys, let's kind of jump in here. Lots going on. Market's making new highs. We have kind of yields backing off, bonds moving up. We'll talk about a quick bond trade. And then, of course, the feature of the show will be our special guest, somebody who I've been friends with, colleague prior to that, and still a mentor. Lucky to get him on the show. So we're gonna keep it tight here this morning. So TA team, I'll be right back with you if that's okay. And
sounds good.
I'll tell you what. You know what? Why don't you guys stay in on this? Let's hit the markets here real quickly. Let me just zoom in here. Show you where we are at the top here on the in the averages. So let me just bring over Motive Wave. You know, this is a market where, again, the entire most of the financial media was trying to convince us that recession was imminent. We stayed long through it. You know, we have several different interpretations, but all suggested going higher. So where are we now? We are, I believe, coming up against some resistance that I see my team did here. Bennett, did you do this work up here?
I did, yes.
Oh, that's nice. So the last trade that we were looking at, I had the NDX butterfly, and we established that coming out of triangle, potentially B or 4. We're not exactly sure what triangle that is yet. We could have a deeper discussion about that. But we did establish the NDX trade, and we put it on pretty good, sized up pretty well, and we were centered around 8250 in the NASDAQ, which is the equivalent of about 3,100 in the S&P. And, you know, we wrote it up, had good, good return heading into AM expiration last Friday. Fortunately, the market went too far away from our butterfly, gave some of our profits back overnight. But the takeaway is this market continues to be very strong post-triangle thrust. So as Bennett did some really nice work up here on the S&P, we've got resistance from 3140 to 3180. And Bennett, I would say you do a nice job. And just so you guys know, our Motive Wave, our Elliottwave software throughout the trading analysis team, these fine guys to my right, we all work and collaborate on one cloud-based Elliottwave workspace. So when I come in the morning, like I just did, Bennett was doing work, Alex is doing work overnight. You know, our systems are updated automatically, so we work very much as a team. So it looks like, what do you think, Bennett? Coming out of 3140, probably from a trading point of view, maybe sort of a wave 4 kind of theta positive sort of complex correction play in options, or what do you think, or do you want to set aside?
I'm kind of sitting aside at this moment, waiting to see what happens here, pushing into that zone. You know, unlike the NASDAQ with the S&P, we just don't have a correction following the green wave 2 lows that we can square up as a fourth wave of the same degree.
Right. Okay. So back to let's just take a look at that in the NASDAQ. To your point, it just doesn't count as well, right? I mean, this actually looks like it could be a series of 1-2s, 1-2s, which means we might go into a series of 3-4, 3-4. So, I mean, are you on board that? Sort of a 1-2, 1-2 and just kind of consolidate here for a while?
Definitely.
Okay. You know, and that's the kind of time.
As soon as we see that trigger where we enter that zone, at the moment, our structure is still impulsive. Volatility is getting really low, as you can see how narrow the movements are day to day, but it's still in the uptrend. And I think we need to see that kind of breakover. And once we see that breakover, I think it'll be a good opportunity for us to set up a sideways income fly.
Exactly. That's what we like to do. That's why we love Elliottwave so much, guys, is it gives us context in terms of whether you're in a motive trend where you want to be directionally biased, buying premium, or if you're expected based on the guidelines and rules given to us by Elliott, if we're in a corrective phase, as Terry said, go delta neutral, theta positive, vega negative, short volatility, long theta, taking in premium in the expected sideways range. And we'll see. This is a pretty impressive move up. And what was interesting yesterday, too, guys, is we finally got the small caps participating. We got our RUP was up like 0.5%, 0.6%, with the Nasdaq and the S&P were kind of messing around. We're seeing participation in financials, seeing participation in healthcare, which I think are over 50% of small cap RUT. So that's kind of encouraging there, but still morbidly range bound. No, I shouldn't say morbidly range bound. We're starting to move up and out. Let me just check in. How's everyone doing here in YouTube land? Everybody okay? Is the volume okay? Good morning, everyone. Steve, Juan, Yuri, Ali, Zach. What's up, guys? Okay. So we did put a little TLT trade on here. Let's talk about that quickly. TLT, your bond ETF. 20-plus year ETF bond tracker. I think one of the cleaner counts out there. Let's take the Elliottwave count aside here. We just put this on with our members. And, it's pretty simple to start. Just a sort of a little parallel channel here. Control-C, Control-V, copy-paste, just drop it. Coming back to the top of broken channel resistance, now acting as support. And it also squares up with a pretty good little wave 4 pattern here in bonds. So we did dip our toe in here on an ABC pullback in TLT. So oversold bonds, overbought yields with indexes up into resistance post 2019 triangle break. Maybe it's time for a little bit of a backup here and move up in bonds, down in yields, and we're starting to see that kind of play out. I'll show you the trade that we have on with our members here. So let me just go. I have it in my Roth. You guys think I'm crazy? Yes, I do trade options in my Roth. Let's go over here to analyze TLT. Okay. Looks like we have some funky option quotes here pre-market, which is fine, but I've got the 137, 140, 142 call fly. It's broken wing, so it's $3 below the body, $2 above. By pushing that upper strike down $1, you're bringing in more positive delta, which gives it kind of a positive shift here. Again, that's not the right P&L curve. We must have some funky pre-market quotes, which is fine. I've got about 720 risk, max profit about 2,200 on this trade, and if it explodes higher, we make 280 on the upside. So good little bond trade. And then one other market I want to put in front of you that we talked about on CNBC yesterday. Bennett and I were going back and forth on Slack on this one. And actually Terry was as well. What do you guys think about Salesforce? Team. Trading analysis team.
Okay.
I think we lost our count there.
No, you didn't lose anybody here. We were just hanging out.
Okay.
Yeah, okay. Salesforce is not bad. I think it's been in a long period of consolidation. I was using our new Optima tool, looking at the relative rotation graphs, and now I'm not seeing it being as strong as a few other of the stocks in the similar industry.
Okay.
But I see the potential. Certainly, the potential is here with the wave counts.
Okay. That's good to know, and I need to spend some time with you, Terry, and go over as we build out the portfolio. I showed people the capital that I put in the portfolio that I'm going to be building out over time, and I need to spend some time. Terry's been doing some great stuff with the relative strength and sector rotation. So I thought Salesforce was interesting. Sometimes CNBC throws stocks at me and say, hey, let's talk about these on air, and I look at the chart. I'm like, hey, that's pretty interesting considering, I don't know, Salesforce has got 180 PE. I think it's 50 times forward earnings. But when you have a kind of a pattern like that suggests sideways consolidation, we might be ready to go into wave 5. I kind of want to keep an eye on that. So anyways, I tweeted something this morning. that I was going to describe why I have two things on my desk, my trading desk, and I've had them for 5 years. Anybody, and you guys see that tweet? I have these two things. I have this Nautilus, and I have a bullet. There's two parts to my trading philosophy. Number one is there's a natural order to everything, to life and the markets. Your job is to discover it. Sometimes that natural order is written. Sometimes it's not. I don't know if the future is written and we can know what the markets will hold in the future, or is our job just to control the now, use all the tools that we have available at our resources available at our disposal to make the best move going forward. When it doesn't work, you have to remind yourself that your ammunition is limited. And I have one bullet. This is a 45 caliber shell on my desk to remind myself that the capital we're trading with is dangerous. And along that process of discovering the natural order in the markets by these beautiful tools that we use, you will sometimes get off track, and your ammunition is limited. So use it sparingly. This is from shooting. This was a gift from somebody who's very special to me. Andrew Baptiste. He gave it to me about, I'd say 5 to 7 years ago. I don't think I've ever showed him that I still have this. So he's our special guest, and let me just introduce Andrew. Just a quick little bio here. This is somebody who, for me, is what I consider to be, in the world of investment bank and institutional technical analysis, an icon. He's been doing it for, we sent out an email, 27 years, and he texted me right away, Todd, it's 38 years. I think he has about 28 years of investment bank analysis, being the chief technical analyst at Morgan Stanley and JP Morgan in the fixed income division. Prior to that, he was down on the floor at the IMM, 1980 to 1986, owning 3D technicals, went to JP Morgan, went to Morgan Stanley, and these aren't the retail brokerage firms, guys. He's global head of technical analysis. I'm going to confirm with him when we bring him on, servicing some of the largest money managers and private investors and wealth management firms. And I want to dig into this. And his specialty, obviously, is Elliottwave. And, I really wanted to bring him on to kind of discuss and sort of dispel some myths that Elliott is rejected too quickly in the retail world, because it's tough and it doesn't tell you exactly what's going to happen tomorrow, or it's formulaic where A plus B equals C. Remember, there's a natural order and sometimes you're going to fall off track. So preserve this. So I'm really excited to bring him in. And he said something, any of you guys who have seen any of my presentations have seen this slide. This is when we went to visit Drew in Florida. This is his second house. He has a place in New Jersey. We used to live one town away from each other. And this is something he said that forever stuck with me and I used in many presentations, which is the wave principle is a simple rule-based methodology, 3 rules, that allows the practitioners to dissect the collective mindset of the market participants, which allows for defined, attractive, positive risk-reward trading. It's a game plan. And I just don't know of a more eloquent way to state that. So without further ado, let's bring in Mr. Andrew Baptiste. Sir, thank you for joining us on the Elliottwave Wednesday live stream.
Hello, Todd, Terry, Bennett, Alex, happy birthday.
Very nice. Drew, how you doing, man? Thanks so much for doing this. I can't tell you how much it means to me.
A pleasure, a real pleasure, an honor, Todd.
So you're in Florida living the beautiful, good life. You've got that chest open, the sun pouring through. What's the temperature right there in Florida right now, Mom?
73 and sunny, I'm afraid.
Oh, Lord. 73. I think it's 33 out here. So anyways, so first, again, did you know I was going to bring this Nautilus out? Do you remember giving me this?
I do indeed. They are covered. My desk is simply covered with all of these toys.
This has never left my trading desk. So let's just get into it. We have limited time. Drew has a very kind of a storied past with Elliottwave, and somebody who can bring his experience, his 4 decades of experience to us, which we're obviously huge practitioners and lovers of Elliottwave. Drew, talk to me first. How did you first get introduced to Elliottwave? I know the backstory, but I'd like to really dive into this. Who first put Elliottwave in front of you?
Well, that would be my father, who was a Merrill Lynch executive, and why I grew up in Hong Kong in the 60s into the 70s. He happened to visit with Ham Bolton. Ham Bolton was one of the last practitioners who actually spoke with Ralph Nelson Elliott. And I still have the book from this 1966 Wave Symposium. And that's how that started. And as you may know, Bob started there in the 70s also. So
Yep.
my father left Merrill in the 70s. Bob was there, but that's how the introduction to Elliottwave. So I started in the very late 70s taking a look at it. And it took me about 3 years to actually discover waves. First 3 years was a bit of a mystery.
Okay, so you started in 1980, looking at your resume, 1980 you started at 3D Technicals, correct?
Correct.
And then, so you morphed into Elliottwave in the 81, 82, 83. So you didn't start your business based on Elliottwave.
Absolutely not. It was a floor service. Keep in mind, back in the day, we were providing live charts on the IMM floor, no computers. We were actually doing it by looking at the ticker tape on the floor and keeping them live. And just to explain the 3D, three-dimensional seeing, no, it's Drew and my wife, Aphrodite. Her name is Dee Dee. So that's where the 3D came from.
And I've got some questions obviously lined up for. And Drew, what you'll find is he is a very dedicated family man, loves his career, loves his passion, lives life to the fullest. And as I said, his family is everything as it should be to everyone. And you'll see that as you come out. And my wife and I would go out and we'd go hang out with Drew and Dee Dee, his wife, and hope none of my friends are listening. We'd have more fun with you guys going out at the Tukes than most of my friends who are younger and less energetic than you are. So thank you. I miss being your neighbor.
Same.
All right. So Father introduced you to Elliott. As you evolved into Elliott, how has it? Let's start right with the heavy hitting question. How has it evolved into your business? How has it evolved into your daily routine? Just talk about like how that evolution became and what it's like to approach the market as a professional practitioner as you are at a full-time basis, looking at the market through the lens of Elliott.
Well, traders, investors have an opinion or formulate an opinion. Typically it's fundamentally based, but I would always even ask that fundamentalist with that approach is simply, how are you going to express the idea? It's simple to have I call that a pub view, by the way, meaning you're getting hammered in a pub talking about your bullish or bearish, but how are you actually going to deploy the capital? I had found that the Elliottwave principle allowed one to approach the market in a very disciplined way where we have precise entry, precise risk, and I think that is critical. Nothing worse than the guy who likes something at 80, but at 53 is wondering what he should do. I, as someone who's trying to keep risk at a minimum, would much rather prefer risking 1% 3 times rather than, again, long at 80 and at 53 wondering what one should do because the fundamentals haven't actually shifted. So I think it was the wave principle that intrigued me. And although all the points you've made about subjectivity, truly, they're real. I have fought it for 40 years till this very day. But what you and I both know, and your team, which provides an excellent service at an unbelievable cost, it's frightening to me, quite frankly. It's true, though. This is what allows the building blocks for successful go at risk versus reward.
Interesting. So Drew, as you can tell, he's an analyst, and this is one of the questions a little further down. I think we'll skip to it in terms of talk about wearing 2 hats, because Drew, so you guys know, his business TAG, Technical Analysis Group, his website is tag618.com. He services significant. How do we describe your customers? I don't want to misspeak here. Is there a way we could safely kind of address? And Drew can't name specific customers because we're talking serious size players who don't want to be named. But
I would say you could call them the usual suspects from Southern Connecticut, Manhattan, Geneva, and London, maybe some Singapore.
Okay, all right. So
Some for as many as 35 years. In one case, a Southern Connecticut client would be, yes, we'd be going on 32, 33 years.
And Drew and I had a lot of prep on this, and again, I'm very sensitive as to who the people are. But I can assure you guys, some of the biggest and best rely on Drew's analysis. Is that safe to say? And his analysis is heavily rooted in Elliott. So when I hear retail guys say, "Oh, poop Elliott, it's too subjective. The counsel is changing." Drew, back to what the last thing you said is, you've been fighting it for 40 years. It's subjectivity, but wouldn't you be scared if your father taught you a methodology that is objective and said, "Son, this is your secret formula, your approach to success and wealth"? I mean, would your career have gone as well if he put a formula, a system in front of you? I mean, is subjectivity a bad thing in markets and life?
Absolutely not. As you know, I not only use it in markets, but raising my children, as I've mentioned, Todd.
Yeah.
I gave Todd a tip the other day that you really can't help regulate your children's lives too high, too low. And it's even moved into that part of my life, no question about it. In terms of what you've said about subjectivity, it is true, and I think it's a benefit. So I'm with you on that one, Todd. I've always found anyone who wants to sell me a system that performs incredibly well, I'm extremely suspect of.
Yeah, no, I agree with that. Talk about, in terms of your offerings at TAG, what's a day look like when you are you write your probably what 3, 4, 5 updates a day, but also you have communication with your clients. What's a day at TAG look like for you?
Well, 3 to 5 pieces a day would be a very busy day. One of the things that we're doing that is different is less frequency, higher quality setups. My players are not really interested in the day-to-day, although we do provide a running commentary on IB, the Bloomberg product, which, as you know, is 350,000 professionals around the world using this tool, Bloomberg.
Right.
We do put out content all day long, but truly we've slowed down the pace in terms of frequency. And the reasoning is simple. We're trying to catch larger trends. The day-to-day, we think, is an increasingly difficult task to come in each day. And at 8 o'clock, it's the profit train ready to take off. We don't really believe in that at all. And we do believe that there's increasingly difficult markets that we're challenged by. So we think an approach, taking a step back, has a greater validity, greater success rate.
Do you have to condition your clients? And again, I mean, it's easy for most, I'd say 95% of the viewers on the show here are retail viewers. Do you have to condition the institutional guys to say, look, Elliott is beautiful and that gives us context when we have an edge or when we don't have an edge, and if there's nothing there, we can't do it. I mean, are they breathing down your neck for increased production? Do they still kind of suffer from quantity equals quality, or no?
My players, I'm going to go with no. I think they clearly understand that this day-to-day 8 o'clock sell-side train selling you something, pretty difficult business, and I don't think there's going to be great and high success in that in the future. I truly don't believe that. So what we're trying to do is actually, we like to curate, if I may use that term. Yeah. I know it sounds a little fancy, but curate high-quality trade ideas. Focus on those. You brought up one of the primary ones that we've been hammering on in TAG, and that is the interest rate market wave 3 ending in August to 4, which, this is what makes things fun for all of us who are analysts. It's interesting 12 weeks ago to say that I think yields should go up to 192 to 202, which is 197 plus minus 5, and it should happen in a two-way fashion. And I even wrote this 12 weeks ago. What is a correction designed to do? A correction takes the collective eye or mindset off the prize being the trend. Now, segue to November 8th, when we put in the high in yields and low in TY. And what was the mindset just then, 10 days ago? Just go back. It was reflation. It's yields going higher. Please.
Do you mind if I put the chart behind you as we're walking through this?
Go for it.
Okay, so you're talking 10-year yield, correct? And the team is now on the call as well. Hi, TA team. Say hi to Drew.
Hi, guys.
Hey, Drew. Glad to have you, sir.
Pleased to meet you.
Drew.
Respect.
Right. So here's
Alex. if you feel any better, in the year 2020, I will have been a part of 8 decades. So it's okay. It's true.
But yeah.
Go ahead, Todd.
Okay, so this is the 10-year yield, and I track the waves on the futures products. I don't track so much on yield, so I'm not prepped. But you're saying, so we're in wave 3. You're looking at potential wave 3 decline in 2019, sort of a 3-wave move back in November of 19. So please pick back up where you were.
What's satisfying for me as an analyst after 40 years in the business is predicting 142 to 147. The low is, I think, 1.427. You can see there's multiple tests. And as we're basing, it's suggesting we should pare down, protect, eliminate, probe the long side. And what I really, again, like about it is able to predict 192 to 202, which is 197 plus minus 5.
Yep.
And that's exactly the high. And 12 weeks ago, again, I'm trying to let them know that as we rise, their opinion, their bias is going to shift to this new reflation thing, and China and US are going to make sweet love and everything's going to be beautiful and yields will fly. And that's what's satisfying. So 11, 12 weeks later to the target. And as you can see, we've come down 25 basis points. And it's satisfying. It's something that our players, who are macro-minded players, can really get their hooks into.
That's one of the things that, let me just take a step back. And YouTube viewers, guys at home, tell me if you have questions, comments, throw them in there. And that's originally how I found Drew. Let me just take a step back. I was trading at a foreign exchange hedge fund, and we'd get research from the investment banks. We get it from Goldman, Barclays, Morgan, and I was trying to find a way to kind of get ahead of the markets and sort of anticipate. And if you just listen to what Drew said, he had specific levels that were identified ahead of time to say, here are my action areas. I had the responsibility to trade for the fund, but also write the daily research report. And I had to be able to write something that said, act at these levels. And the guys sending Elliottwave, specifically, Drew, when you were at Morgan, there was 2 other guys. It was Morgan, it was Chorik at UBS, and John Noyce at Goldman, who were doing Elliott, and I would constantly wait, and I would bother you. I'd pick up the phone and try to get through. We were a small fund. We weren't big, and Drew would talk to me and go back and forth, but I would just try to bother you so much and learn as much as I could about Elliott. But again, it's a methodology, combination of Elliott and Fib and traditional technicals where you can look ahead of time, act ahead of time. And I find that those are the best trades. Those are the best turning points you can pick up, ones that you're looking at ahead of time when emotions are low. You're not right in the middle of a trade or right in the middle of investment with dollars flying everywhere, right? I mean, that's just, can you talk about sort of, is this truly the one leading indicator? I think a lot of technicals inherently are lagging, but are we truly looking at a leading indicator where you can say, here's where I want to be acting ahead of time?
That's the beauty of the waves, predictive. It's what makes it challenging. It's what makes it rewarding. However, over the past, let's go with Fibbo, 5 to 8 years, we're spending a lot of time, believe it or not, on timing, and that's GAN-based, and it's also astrological. So if you don't have enough ridicule in your life from being a wave counter, why don't you throw in some astro? That should do it.
Oh, Lord.
However,
Alex does that.
Stomach to bring that up, Drew. I might have to be a closet moon astro follower.
No, it's completely. It's a great combination.
Legitimate. Yeah. And here's what we're finding is when to engage, do not engage. Now, my clients are not on their screens 24/7. They're looking for larger plays. So the less frequency of our work is really designed to have them pay attention when it matters. No names being named, but there are some services where you can get upwards of 50, 80 snips a day. I find that pretty difficult, and I do think it's difficult to try and every day have a wave count for everything. I think it's possible, but we've learned that by stepping back to the larger part of the equation, let's go with a 1 week, 1 month and out.
Right.
Really, really valuable for us when we know, for instance, right now, middle of December, we've said this now for 8 weeks, let this equity run flow. Middle of December, January, we expect to top. And interesting to Bennett's point earlier, if I'm not mistaken, we think this 3 will be limited to the 2155 area. I believe Bennett might have said 50 to 80, but somewhere in the 50s, we think that we should get a reaction that will allow us to see down in 4 and that next leg up, because we're thinking that next leg up completes something larger and there's a nasty move. How nasty? We do not know. But for now, we know, 1, you don't fight something that's making all-time highs, an incomplete wave count. 2, we know that what looks like a 1-2-1-2 is another 1-2. We need a reaction in order to fine tune, and that's exactly what we're doing. No noise. We call it steady as she goes, and no drama, no heroes.
Okay, now, is there any way I can drill down again on that? I know you have to be protective, and I know it took a while for me to get Drew on, because, as I said, he deals with a higher, not a higher level. All customers are important. Is there a way I can get you to drill down to your S&P count, one of your interpretations again, or would you prefer to kind of move on from that?
I would say that I'm really aligned with you guys very much down to the detail. So the 1-2-1-2 off of your E, I'm going with that. And I think it's possible that we're in the latter stages of this sub 3. But apart from that, that's the problem with your show. Todd, I told you that. I hope my clients aren't on this.
I appreciate it. Well,
you guys do a terrific job. I'm sorry. I watch every Wednesday now.
Bennett, Terry, Alex, we're going to need to screenshot, capture that, put that right. No, I appreciate it. And I can't wait. The Elliottwave community, I love it. I embrace it. But the debate that is raged since January of 2018 is amazing within the community. And Drew, are we supposed to know right now what is above us? Are we supposed to know what this wave count is? Or perhaps is the future not written? Is there going to be a huge supply that comes to market that doesn't even know it's going to be sold yet, that is going to influence what this wave count winds up being? Are we supposed to know what it is, or are we supposed to be completely open-minded over this last year and a half?
Completely open-minded to the last year and a half. I think the clearest thing we saw was a year ago is the 3-wave move down, which we were on, went 100 points beyond where we thought, 24.20. But that is the last clear mark on the chart, the 3 down.
Got it.
This move up, I think, I truly think we could gather in a room with 50 Elliott analysts, and I guarantee we could come out with probably 144 different counts. Truly. I happen to like this one. I think it makes the most sense, which would tell me after this 5 up, regardless of where we're headed next, south, obviously, but how deep, I will not say that. I will say that I think that long-term support intact ranges from 2450 to 2100. Long-term support. That's not to say it will get there. That's to say that after we complete this 5 up off of your E, I think caution is the word. Presuming, and by the way, you showed a chart there where we broke out around 2055 of what I consider to be a speed line. And what we write at those times, that weekly, I think it was, Todd. And when we got there, it's about act and react. The market's saying act and react. And it did. And it's been a consistent saying, I want more. So there is zero reason to fade this. There's every reason to take the most bullish interpretation and stay with it, meaning from E. There's no reason not to take the most bullish interpretation until at least we have something on the what we consider nano to micro term, 1 to 24 hours. So show me something.
So let me ask you about this, and I've spoken to Prector about this as well. And sorry to name drop, but there's a lot of work that dates back to 50 years ago that says you need to observe both the semi-log and the arithmetic scale. And I think the Elliottwave community has shifted very much towards semi-log, which, when you're looking at percent change moves, it's easy to see a wave 5. Drew, I mean, could we be looking and missing the fact that we might have to take log off and go arithmetic and say, perhaps is this ridiculous? Let me just, sorry guys, I'm going to blow this workspace up. If you go to arithmetic, could this potentially be a wave 2 off of the 2009 lows? I mean, are we about to go into a bull market that, completely puts 1998 to 2000 to shame? Because this is the largest correction when you go to arithmetic from post 2009 low. I mean, that kind of suffices as a wave too. Would you even entertain that?
Yes, and I wouldn't fade it either. If you look at some of the, you guys have a stronger fundamental bent than I do, but let's look out there. Just 12 weeks ago, everyone was thinking about MMT and negative rates like, oh, of course.
Yeah.
We have a Lagarde in charge over there. Seriously? Yeah. You have a Donald who calls our good old Jerry Powell. He calls him an enemy of the state.
I couldn't.
And he hasn't moved fast. It's really extraordinary what's happening out there. And then let's throw it out there. Let's just say there was some incredible China-US deal. I mean, just over the top. You want to fight that? I think the answer is a big no. You guys are in the right trade. There's no reason to fade it. But at 5 up, I would act. Why? Make some money. Take some money.
I think that right after that, I think in the same tweet or the next tweet, he also called President Xi enemy of the state, right along with Jerome Powell.
Yes.
So, and they just had lunch. I think they just had lunch together a couple days ago. So maybe they're playing nicely together. But so you do see. So for now, 3150, 3200 S&P upside. Don't fight it. We're starting to see some European participation, emerging markets. Didn't see the volatility. EM didn't see the volatility at the end of 18 and 19 that the American markets did. So at that point, your goal, you're still then going to get protective, and would you even express interest on the short side? And will you take shorts? I mean, your clients obviously would trade both sides of the markets. Do you personally, your clients recommend the shorts?
Absolutely, but we do it with great care, with a setup, with risk known. Yes, for us, 31.55, look for a dip in 4. We can then fine tune 5, but we're going to guess, let's go with 32.25, something along those lines. After I count that 5 up, yes, we will say the additional strength is an opportunity to pare down and or protect and or eliminate. It really depends on the risk taker, size of their pockets, depth of their pockets, and overall goals. Let's face it. But absolutely, we probably get short once a quarter. And as you know, it's really swift. The last one was a short at 29.94. 3 days later, it was 144 points for us. 3 weeks later, it's back at 29.95. But by the way, it did miss the downside target, which is also common and also an underlying sign of what? A very bullish market that still needs it.
So when you're discussing this with your clients, and I've only been doing this for 20 years, I consider myself to be pretty good with Elliott. Me to keep up with Drew and the conversation, he speaks very fast and his levels are very precise. When you have conversations with your clients, do you speak to them just like this, or do you vary your tone, vary your speed, vary your detail in terms of the clients that you speak with? Are they operating at this level in terms of Elliott knowledge?
Absolutely not.
Okay.
Yes is the answer to your question. I take waves and translate it into, either Mandarin, Spanish, or English, and that works out better. No, they have interest in the waves, but it's about relying on someone who provides them ammunition for them to express their ideas.
Okay.
Reasonable. They're risk takers. They're professionals. So what can you offer them? Risk levels. Remember, at the end of the day, they're very strong thinkers, some of the strongest that are out there. It's really a question of how can you help them to, here's where it's wrong. That's really helpful. And by the way, why are waves interesting and useful? Predictive, right? So you can offer someone who's just along liking it from a fundamental perspective, here's places you can take some off and buy them back cheaper. Here's where we can exit and the fundamentals will then follow. Right. A case in point would be your long TY trade right now. It's come up a pretty long way right now. And you ask yourself, do you want to maintain a core and trade around it? Well, I think 4 is in and we're in 5. Now the question is, would you recommend them to be long TY today? Well, on a micro term basis, my answer would be no. On a near term to medium term basis, the answer is yes, and it may set back on them a point or more. It really depends, again, on depth of pockets, conviction, what's your trading style?
Right, time frame, scale, instruments that you trade. If you're trading options, obviously your time frame is going to be important. Trading futures, and so so yeah. Alex has a question. Let me just bring Alex back here. Alex, you're on.
Hey, Andrew. Just one question. As I see that, of course, I'm as well a little bit esoteric and use a type of astrology as an experiment. So that's a very various subjects, and again work. But I've been listening what you have been talking all of this like 10 minutes, and this is something which I see that every Elliottwave practitioner after let's say 5 or 10 years of experience is getting the wording on reading this wave counts as almost as a tape. So I'm also wanted to ask you this proficiency in a sensing of what is actually going behind the scene, like reading the charts. It's you're trying to see what is actually going on in investor psychology. And that is the level which I think every Elliottwave practitioner should come. It's not just about the waves and numbers. You need to go behind and actually try to read what is going behind in this collective unconscious thing. Am I getting right this? By listening to you, I get a sense that you are actually are not just trying to look the waves. They just give you a certain points when you are willing to take a risk where the investor's psychic can change and change direction.
I think I would agree with that. I'm not sure that I'm answering a question there, but Alex, I do agree with you. The waves, we would say, actually represent 50% of our work, which has come down from a very high level of everything to me. I used to not care at all about anything else. Whoa, ding, ding, ding.
Sorry, yeah, that's Thinkorswim TD Ameritrade tells us the market's open.
Yes, indeed, and I'm very grateful. Alex, I did want to say to you that next year it's going to be exciting for you and I really hope. Many of my players are foreign exchange oriented, many of them. And let's face it, it's been 18 months of writing in what looks, it's kind of like running a marathon in a phone booth. I mean, it's just a ridiculous pattern in the Dixie on a monthly. And what we do in cases like that is, what should you do when you're trading in a tube like that? Basically, the underlying trend is up for the DXY, but it's done nothing for 18 months. I think there's interpretations that one can take. The obvious one is the AB diagonal when we're going down. I think most people like that. Makes sense, right? Who in the world wants a stronger dollar? No one. No one. So that makes me believe there's also 1, 2, 1, 2, 1, 2, and we'll be at 105 and 110 later. I won't dismiss it. I just can't dismiss that. And I think it's an important thing because here we are saying that the downside for the dollar, it looks, I mean, it looks right. It should happen. It makes a lot of sense. And no one wants it, from Donald to Xi to no one. Yep. So I always say to myself, what can go wrong? Can you tell me that that 5 down wasn't a C and we're headed up and we've only done 1, 2 and a bunch of coils? Well, what we tell our people is, for one, whilst it's in the tube, meaning the monthly channel, we need a strong bar up in order to say, hey, there's a 3 of 3, or show me a reason to think that the euro can go up beyond 113. No problem. We have a lot of mess, but I just wanted to say, you, Alex, I'll be watching next year. So do a good job in FX. It might help me out.
That's awesome.
All right.
Yeah.
That's awesome. Yeah, it's Alex, as I was telling him, Alex has been in FX a long time, Drew, super long time. Never turn your back. When vol is this quiet in foreign exchange, don't dismiss it, because when vol returns, it can come back with a vengeance, probably more so than almost any asset class. Drew, would you agree with that?
I would, and you know the depth of it, right? Every stock market combined doesn't touch FX, so yeah. I can tell you we have people who are chomping at the bit in foreign exchange to get involved in the DM side, where you have the thickness, rather than playing, let's say, the Chilean peso versus the dreaded Vietnamese dong. I mean, how much are you going to be able to do there?
Drew's got some famous, and I'll let you go. I know you got to get to work here. Drew's got some famous names within the investment bank circle for some of the foreign exchange pairs, like euro yen is called the eye gouger, I believe, right? And dollar yen is the house of pain. What am I forgetting?
House of pain. The JGBs we call the crypt. we call the Nikkei the buy or die program ever since, a few years ago, they kind of Abenomics kicked in. So we used to call Japan the land of death, and then there was Fukushima, so we couldn't say those things anymore. So, we've moved on. We've moved on from that. We're all light and bright. But I would mention 3 years in dollar yen. I did want to bring up one point on this call. I am finding that data is fairly unreliable and should be checked. I noticed Bloomberg, where there's 350,000 professionals using their data. Oh, there's a lot of misses there. So it makes
in
you
FX
wonder.
you're talking about, in FX.
All around, especially ones that
okay.
are not exchange traded, spot type. But you see some pretty lousy data, and I would make a point that that's a pretty important thing to think about. In other words, watch your P's and Q's, do check your data. And for those of you who aren't aware, there's never a time to be lazy in this business, meaning your risk has to be known and stop losses have to be used at all times for us. Otherwise, the sizing's got to be much smaller.
Yeah, absolutely. Well put. Richard says, Drew, thank you for sharing so generously today. I believe Kipling nailed, if you can talk with crowds and keep your virtue or walk with kings, nor lose the common touch. Well said. Drew, I want to thank you so much for joining us again. You've shed a lot of light on kind of the professional investment bank approach to our loved analysis. If you got to take that, you would just hop right off.
I did twice. That's a big client, by the way, and I've kicked him out twice. I did want to say to all of your viewers, you have an incredible resource here, a wonderful team. It's an incredible value. God, I hope my clients don't find this. So thank you, guys. I'm very appreciative to come on, and thank you very much.
Drew, it's our pleasure. Thanks very much. The
Absolutely.
team really appreciates having you there, and I might make my way west to Bali this winter if you guys are still down there. And you also have a very special occasion coming up in 3 weeks. Can I talk about that quickly?
You can. Send donations.
Drew's beautiful daughter, Chelsea, is getting married. What's the date?
December 7th, Pearl Harbor Day.
That's right. So congratulations. Drew's baby girl is getting married to a wonderful guy. He's a proud grandfather and got a beautiful family. As I said, I always love hanging out with you guys. You guys are just exceptional people. You've been a great mentor, and I know for me and my team, and also I know a lot of other analysts out there in the investment bank space have a lot to owe to you. So from the Elliottwave community, Drew, thank you for everything you've done.
Live long and prosper.
See you, brother. Talk to you soon.
Bye-bye.
Thanks, Drew.
Bye.
Thank you.
I mean, it doesn't get better than that, guys.
Yeah, it was fantastic.
It doesn't get better.
Yeah, that was fun.
No.
He's got an incredible passion, and I think it's important. It's the life in the markets, whether you're at home trading every day, which your money is just as important as any of ours. We're doing it every single day, but the ups and downs that are inevitable in the market are real, and to have a methodology that you can rely on, whatever it may be, is super, super important. To not methodology hop. You heard Drew. He started his career 4 decades ago with Elliott. He's begun to branch out a little bit, and yes, I would say that the markets have changed. I think the what's my word? Help me out with this. The electronification of the markets, I do think, has changed. There is human psychology driving price patterns, but I think they are masked and they are changed with the digitalization of trading. Let's call it that. And Drew's adapted, but he's adapted ever so slightly. I've been reading him for 15 years, and I guess the point is, markets can test your intestinal fortitude. It can push you to the very limit, but it should take a lot for you to change your methodology, because when your money is involved, the markets will twist your emotions and put you to the test. And you've got to be able to rely on a methodology that you trust, a group that you trust, and that's one of the things that I've kind of learned from Drew. Guys, what about you? Any takeaways? TA team, any takeaways? Viewers, talk to me about that.
I think it's reassuring to hear that even the large investors take Elliottwave seriously, and apply it along with the rest of their fundamental analysis, which Andrew was trying to talk about there. The key thing was that you can use all of these indicators that you want, but all of those indicators are lagging indicators, and none of them are predicting indicators. And Elliottwave gives you that predictive tool, because you can see when you can establish the pattern, you know the pattern is going to follow, and his clients are using that information in the longer term to establish key levels or timing when they're going to make whatever moves that they choose to make at the time. So I think that was very interesting.
Yep. Well said. Well said.
Yeah, for me,
yeah,
just
go
one
ahead,
sentence,
yeah,
because I mean, it's like the same when you meet Prector. I mean, we are in Elliottwave every day of our lives. So when you meet some of these guys which have been doing it for 30, 40 years, it's like you meet somebody who was actually first step into it 30, 40 years ago. It's really like iconic, you know.
Yeah, there's a lot
It's
of
like you meeting somebody which was actually taking the first steps into this methodology, like Prector and this guy.
He's a pioneer, and there's, you know, Elliott. I mean, Elliottwave is, you know, it was born back in you know, I think R.N. Elliott on his he started in L.A. He got sick in the latter part of his life, went down to Mexico. As he was looking for something to do, he was active in the, I forgot what presidential administration. He was sort of a liaison.
It's Argentina, I think.
Yeah, he was a liaison for South America in terms of getting their finances in order. Got sick, couldn't travel as much. And was it Coolidge? I forgot what presidential administration. I have to go look it up. Who he was a consultant for South America. But in the latter parts of his life, when he wasn't able to move, he was literally on his front porch in Mexico and LA, going back and forth, laying out the Elliottwave patterns, tracking hourly closes of the Dow. And this began back in the 1930s. And
by hand,
40s and 50s.
Yeah.
Can you imagine that?
To your point, Alex, I mean, this Elliott, you know, Elliott is I think one of the most misunderstood, often rejected because of its subjectivity, which I think we tried to address. That is not a bad thing. It's inherently a good thing. It goes to the core of technical analysis. Technical analysis isn't much older than you know, into the 1900s. So I mean, Elliott is probably the most well-known, one of the most well-known forms of chart analysis out there. And to your point, like it's kind of a brotherhood a little bit. And those who see the light do it, and those who don't say it's too hard, it's too subjective. I want to follow the path and the formula to success in life. Good luck with that. What were you going to say?
It's not a question of just subjectivity, but how I can be, I mean, I'm in Elliott, as you know, when I met you, and my objectivity is just progressing because I'm overstepping over my subjectivity. So it's vice versa. You cannot practice your muscles if you don't have any weight. So, okay, I'm starting being very subjective doing Elliott, but my analysis, as I'm getting better and better, it's very closer to be objective one. So it cannot go one without the other. So it's just the steps you climb up to be more objective and more not identified with the news markets, reading in depth and try to decipher actually what's going on. So you need that subjectivity to climb the ladder. So that's people, they don't understand that.
That's interesting. That's a good point. All right, so guys, let's just do a quick market check here on the open. Markets are down just a touch here. Looks like we have. Let me just pull this over, and we'll wrap the show up here. Do we have a screen with everybody? Yes, we do. So markets down just a touch. Everything's down about 0.2%. No big deal. Kind of quiet. Crude up 0.7. Still boring. Bonds are continuing to go. That TLT trade looks good. We're moving into the 140 mark. That's where we want to be. Let's just do a quick sector check here, as I've got 40,000 windows open over here. Again, a lot of people say, Todd, why do you need so many monitors? It's to run shows like this and prep PowerPoint presentations. You can't do it on one monitor. You have to. That's the main reason you need multiple monitors. So we've got materials and financials kind of down 1/3%. Energy, communications, health, industrials, S&P. There's tech, trans, real estate, utility, staples. It's kind of just looking at this is kind of a boring day. I'm not really seeing much.
Yeah.
Anything you guys see
Financials,
that's
financials,
noteworthy?
industrials, they're kind of fading a little bit on my sector rotation.
Yeah.
But I do see the tech sector, the XLK, and that specifically, I believe it's in the semiconductors are really what's pushing the tech sector higher right
Are
now.
semis at it again? I mean, this AMD move. Let's talk about this quickly.
Yeah,
we
they've
talked
been
about
strong,
AMD.
really strong.
Yeah, we talked about AMD on. I did CNBC yesterday on Power Lunch. This is a stock that I've been beating the drum on for a year, publicly, privately with our members, but also very publicly. I'm not even tracking a wave count in this, as we just did a huge Elliottwave podcast live stream. I'm just tracking. If you look, I mean, AMD. My data only goes back to 1993. AMD actually started trading in the 70s. So you would see like a thin kind of illiquid move up here from the 70s down into a 2000 to 2019 downtrend line. This is the quarterly chart. This is a 3-month bar. It's now September, heading into the end of Q4 19, might finally get a break above the 20-year downtrend. Yeah, you might say, I think AMD's, I don't know, 30. I screwed it up last night. I think it's 35 times forward earnings, 180 PE. Is it overvalued? Yeah, maybe. But in terms of valuation, it's not incredibly obscene. But when you couple that with a downtrend 20-year break, that's amazing. Bennett, Terry, Alex, are we looking at a wave count at all? Is there anything you guys are tracking, or are we just kind of watching the move up here?
No, we've got a wave
Bennett
count for
might have a
AMD.
wave
In
count.
fact,
Yeah.
yeah, a few weeks back, we came in at 27, calling for the move higher. So we do have a wave count. I'll be sure to update that.
All right, perfect. Yeah, mine are. For some reason, this computer's not synced to yours. I gotta sync to your charts to get that up. So AMD's going. No reason we shouldn't be able to go to 50. Intel is not yet. I think we're post triangle thrust in Intel, but I don't think we fulfilled the upside wave 3 target yet. I think we're just through a quality post triangle thrust at 57.41. 1618 is 63.70. We had another $5 on the upside. If the semis continue to go, I think Intel's got room to go higher in wave 3. These semis are just unbelievable here. And then what else?
Yeah.
And then
I like applied materials also.
Hey, Matt. Okay.
Yep. That one's got a higher relative strength, and it's still pushing higher in the leading quadrant. It's broken out to all new highs there.
Terry, you and I
believe it's just broken out.
We got to do an investment. Yeah. We got to get together. And, yeah, I mean, look at this thing. I mean, there's no reason you shouldn't see mid 90s in AMAT. Yeah, that's.
I think that one's. Yep.
We got work to do. Okay. Hey guys, great job. Good show. Great analysis team.
We have a blockchain webinar.
Yes.
Just to present.
Yes.
Yeah.
Thank you. That's going to be Thursday. That's going to be tomorrow at 4:30, right, Alex?
Yeah, 4:30 Eastern time.
What is the what's the sign up here? Give me the URL. It's tradinganalysis.com/blockchain. So Alex and team, are you going to join? Are you going to join Alex, Terry?
Yes.
Okay. So yeah, perfect. And I'll be in on this webinar as well. I'll come in. So Alex is doing his first.
Excuse me. That's a sneeze.
A first official blockchain webinar. Alex has been working hard in presentations. He hates doing them. We all hate building PowerPoint presentations. It's hard to pull him away from analyzing the markets. How much do you love doing PowerPoints, Alex?
I'm thrilled, Todd. I'm thrilled. You look at me after 3 days, I'm like that.
So
I'm
Alex
just happy.
It's over. Making presentations is the worst part of our job. I agree.
So giving the presentations is fun.
Oh, I'm glad you just said that.
Someone else can just put them together for us.
Yeah. I love giving presentations. I love doing it, but speaking, but building them. Anyways, tomorrow, So we have a one day, with 30 hours. So 4:30 p.m. Alex and Terry take you through our entire crypto offering. Obviously applying Elliottwave to crypto, why crypto is such an amazing market. We just didn't have enough time to get into it with Drew. It was one of my questions to talk about crypto and Elliott. Him and I were going back and forth a little bit, Drew and I, over the years over crypto. And
we'll bring him back.
Yeah, hopefully we can get him back. So talk about the way Alex and Terry look at the crypto markets. Obviously the methodology we look at, how they set up trades, how they execute trades. So sort of a full deep dive into our crypto offering. We have some kind of explosive forecasts coming up, and I'm sure Alex will talk about. So that's going to be 4:30 tomorrow. So let me just copy this link address. So it's again tradinganalysis.com/blockchain. I'll drop that link in there for you guys. Be sure to sign up. You'll definitely want to sign up. That's the only way you'll get the archive. If you miss it, which you don't want to do, but if you do miss it, we'll send you that email. What else, guys? Did we cover everything?
That's it.
Oh,
I think so.
okay, perfect. Great job, TA team. Thanks for helping me put this one together. And we got member webinar in 11 minutes. We'll see you guys there, okay?
Time to
Sounds
refill my
good.
coffee.
Yeah, I know. Me too. I'm going to get coffee for the member.
Cheers.
Yeah.
All right.
See you guys.
Coffee.
All right. So,
See
guys, thanks so much. I hope you enjoyed it. Put a thumbs up out there. Share this video. Put it on Twitter. Put it on Facebook. Put it on MySpace. Put it on Tumblr. Whatever else is out there. Just kidding. And let us know that you appreciate Drew coming in. He doesn't do a lot of appearances, so we were lucky to get him. I think the only thing you'll find out there is a video he did with Elliottwave International, because obviously he's active in that community. And then we just did a nice interview with him. So share it and get the word out there. And guys, best of luck trading. Hope you enjoy it. If there's other guests you guys like to see in the future, let us know. And all the best. All right, we'll see you next week. I have a pretty special guest coming up again. Not this week, but it's going to be 2 weeks. There will likely be no show for Thanksgiving. Probably no show next week. So we'll have to catch you in 2 weeks. See you guys. Take care.